In this video, I'll discuss Q1 FY26 result and Concall of SD Finserve. So SD Finserve is a NBFC operating in the supply chain financing. So let's understand their business model. So if I talk about the supply chain in a very simple way, at the top there is manufacturer who is like Tata Steel, JSW Steel, Tata Motors. They are the manufacturer. Then comes distributor who are catering to like one or two, three district in a state, and then comes dealers who cater to like 10-20 towns in a district or two, and under those dealers there comes retailers who are like whom we see in our town like hardware shops. They are the retailers. Okay, so at the top there is manufacturer, then there is distributor, then dealers, and then at the last retailers. Okay, so SD Finserve mainly caters to the dealers and distributors of this supply chain. What is the need of dealers and distributors? They mainly need their mainly need is like working capital. That if I am a dealer or a distributor, if I want to cater more area in my region, then what I need to do, that I have to buy more and more product from the manufacturer. Okay, so what I would need, that the working capital. So that is what SD Finserve is giving to the dealers and distributors. Okay, and another thing that can happen, that some of the manufacturer provide incentive if the distributor is doing cash and carry business with them, and that can be another reason to take loan from the SD Finserve. And how SD Finserve manage their risk? SD Finserve always has a agreement with the anchor like Tata Motors, Tata Steel, JSW Steel. They have the agreement MOU agreement, that if the dealer or the distributor defaults on their loans, okay, then the manufacturer have to stop the supply to that dealer or the distributor. So that is why the dealers and distributor cannot default on their loan, because if they default on that loan they taken from the SD Finserve, their livelihood will be in question, because their business will be closed. Because if they do not get supply from the manufacturer, how they could continue their business? Okay, so that is how SD Finserve manage their risk. Okay, and if I talk about the opportunity in this supply chain, there is huge opportunity in this supply chain. There is like million and crores of dealers and distributors in all over India. So there is a immense kind of opportunity in India in terms of the supply chain financing. So that is the point. And if I talk about SD Finserve also, they added Tata Motors in the last quarter, and within 3 months, they have been able to build a 300 crore AUM book. Okay, 300 crore loan book with only Tata Motors. That is how big the need is. That is how big the opportunity is in this supply chain financing. Okay, so that is the opportunity in the supply chain financing. And in the last quarter, they also added 12 locations throughout India, and they are also entering tier 2 cities in the future also, and they have entered tier 2 cities like maybe Guwahati also is tier 2 city. So they entered Guwahati, and in the eastern India also they entered multiple city in this quarter. So that is the thing. And what is the moat of SD Finserve? The moat of SD Finserve is like they are a full fintech player. And another one main mode of SG Finserve is that if this distributor or dealer goes to the bank, goes to a bank, then the bank would charge them around 18-19% of interest rate for their working capital loan. Whereas if they go to SG Finserve, SG Finserve provide them at 12-13% rate. So that is where the SG Finserve have the plus point, because SG Finserve have a agreement with the manufacturer, with the anchors. Okay, so SG Finserve can provide loan at a lower rate because they have the whole stock supply agreement with that manufacturer. Okay, so that is a really good thing what SG Finserve have, and that is, I can say, that is the main mode of SG Finserve. And if I talk about little about cross selling, that SG Finserve is saying that they are trying to cross sell some product to those dealers and distributors, because they have the information, they have the all the things within their company, like the information, the civil score, how they pay their money. So SG Finserve also trying to cross sell some other product like lab, uh, like that kind of a thing. Okay, uh, loan against property mainly. So that is another thing SG Finserve is looking to do. And let's talk about the result of SG Finserve in this quarter. So in terms of the AUM growth, they grew their AUM by 86% in this quarter, whereas the quarter-on-quarter growth was 13%. They added around 300 crore AUM in this quarter over Q4 FY25. They, in the last quarter, they gave a guidance of like they want to add 400 crore per quarter. Every quarter they want to add 400 crore so that they can reach at 4,000 crore mark by the end of FY26. And in this quarter they added 300 crore, and the management is saying that they missed 150 kind of AUM because 2-3 anchor delayed their product launching at the end of the quarter. That is why they missed 150 kind of AUM, okay, in this quarter. So we can expect that they can add this 150 crore AUM in the next quarter. So overall AUM wise, I do not see any kind of problem is there, because the guidance remains at 4,000 crore AUM by FY26, which is like around 50-60% growth over FY25. And FY27 also they gave a guidance of 6,000 crore AUM. So that is another thing they are looking to do. So if we look at the next 2 years, they are looking to double or triple their loan book. Okay, if I look at the FY25 number, that was at 2,300 crore, and they are looking to do what? They are looking to do 6,000 crore by FY27. So in 2 years, they are looking to grow their book by 2.5x. Okay, so in terms of the growth, there is no problem in the AUM. We have to look, we have to track the company that how the AUM is going. Okay, in terms of the disbursement, they done a disbursement of 5,200 crore in this quarter, which is like 200 crore addition over Q4 FY25, which is little low, but the management is saying that it is little seasonal, that how the disbursement would look like. So yeah, and the management is saying that when they would do around, when they they would do around 4,000 crore AUM. The disbursement will be at 9,000 crore per quarter. Okay, so that is the kind of growth they are looking at. That now it is at 5,300 crore mark, and they are looking to do 9,000 crore by FY26. Maybe not, if not 9,000 crore, that can be at 8,000 crore. But if we look at the growth also, then also it is pretty high if we look at the growth. Okay, so in terms of disbursement, that is little low as per as my expectation, but yeah, it is a NBFC business. If they want to do, they can do anything. But yeah, the thing is that what matters is that, like, if they are able to get the money back or not. So in terms of the asset quality, if we talk about the asset quality, they do not have any kind of GNPA in this quarter, and GNPA is at 0 for last several quarters. Okay, in the 60 to 90 DPD also, that is also at 0, but in 0 to 60 DPD there is some kind of delinquency which is at per line with the last quarter also. So that is in a similar kind of level. So if we talk about the asset quality, that remains stable at a very low level, and the asset quality is very low because there is a reason that, yeah, if the dealers or distributors like if they default on their loan, so their business will be like absolutely closed. So that is a very big reason, that very good reason, that why the delinquency, why the asset quality is pretty good in SD Finserve. Okay, in terms of ROE, they done a ROE of 9.5% in this quarter, and they are saying that by the end of FY27 they will do a ROE of 15 to 18%. So if we look at the opportunity, if we look at the increase in ROE in the next 2 years, they are looking to add kind of a 6 to 9% ROE in a over Q1 FY26, which is a very good number. If they can able to do, this is very good, because I always say one thing, that if you want to get a taste of a business, that how the business is going, you have to just look at their ROE, that where the ROE is going. If it is going in a upward direction, then it is completely good. The business is doing absolutely fine. Obviously there are other parameters which we have to analyze, but if we look at in a very short, one go, then ROE is the main thing. And if the ROE is going in a downward direction, then the business is not going in the right direction. So that is the thing. And the management also expecting a big jump in ROE, because in 2 years 6 to 9% addition in ROE is not a easy thing to do. So that is the thing. In terms of the cost of borrowings, in this quarter they have been able to reduce their cost of borrowings by 30 bps, which is a good thing. And if I talk about the spread, they are doing a constant spread of 4 to 4.5%. Okay, and the management is also expecting, and the management is saying that they will continue to do a spread of 4 to 4.5% in the future also. So in terms of the spread, there is no problem, because if we look at their loan book, those loans are very short term. In Q1 FY26, the churning rate of the loan book was 30 days, so they can manage their interest rate. So that is why the management is pretty confident that they can do 4 to 4.5% of spread in the long term. So that is the thing. In terms of the revenue grew by 55% in this quarter, Quarter on quarter also there is a very big jump of 25%. So in terms of the revenue, that is absolutely good. There is a very good kind of a growth. Even quarter on quarter also the revenue jumped by 25%, which is pretty high. In terms of the PAT, the bottom line, there is some kind of a disappointment because PAT did not grow quarter on quarter. So that is uh, that is not a good thing. But yeah, that is a part of the business. And the management is saying that why the PAT growth was low, because there was a 2.7 crore of ESOP cost in this quarter and another 3 crore of processing fee on the bank loan was charged by the bank. Okay, so that is where the PAT was like little low. That is why the PAT was little low in this quarter. But in terms of the whole year, they are saying that they will do 150 to 160 crore of PAT in FY26. So if we look at the opportunity also, last year in FY25 they did a PAT of 80 crore. Okay, they did a PAT of 80 crore, whereas the guidance for the FY26 is 150 to 160 crore. So year on year we can say that is around 100% growth they are expecting in terms of the PAT. So that is the thing. So in terms of the PAT growth, if they can able to do 150 160, so that would be pretty good. So that is the thing with the PAT also. So in terms of the whole business, if I talk about the business as a whole, see one thing, that the business is going in a right direction, because in the NBFC the main thing is what, the main thing is if you are able to keep your delinquencies low. Okay, if that part is low, then you can grow your book at a high pace. So that is the thing with SD Finserve also, that their asset quality is very good. In terms of growth also they can grow at a high pace because the base is pretty low as of now. The pace of the growth is little slow, I can say, and because that can be better. I can say it is a moderate kind of a speed they are going. So in terms of the growth also they have a huge opportunity, because if we look at the segment also, if we look at the industry also, supply chain financing have a really big space. So that is the thing. I can say that as a company as a whole is going in a right direction. There is some here and there in some parameters like disbursement, like PAT, which we have to track in the future. But again, the asset quality, the AUM growth is very good. Okay, so I think if I talk about how you can like manage your position, like in this kind of a company which is very small, because SD Finserve, if you look at their AUM, which is 200 and 2500 crore AUM. So SD Finserve is a very small company if we compare it to other companies. So you can start small if you want to, because if you like see the results of SD Finserve, which is pretty good. So I am not giving any kind of buy and sell recommendation, because I want to share that what I think. And if you ask me, that I would like to start small with this kind of a company which have a huge opportunity in front of them, and then track the company quarter on quarter. If those parameter, if all of those parameter keep remain at a good level, if they can keep showing a good growth in terms of AUM, in terms of PAT, then the approach would be like add small position every quarter, and that is how you can grow big. Okay, because how you would know for a small company that what direction it will go in the next 1 year 2 year? There is no way to know that where the company is going. If anything bad happens with that company, I can also uh, take my all position out, so exit my all position, I can do that. So that is what I am saying, start small and grow big. That is how you can manage your position in a small company. Okay, so that is the thing with SD FinServe. So I do not think anything I left for saying. So I think that's it for the video. So thanks for watching.